All right, ladies and gentlemen, it is time for the pre-market post-wave report with yours truly, the algo capitalist, aka the Vulcan, coming to you live from postwavetrading.com, home of the world famous post-wave price trigger reports. All right, so let's jump right into these charts and take a look at how the week ended to see what we can expect to start this week off. And it's good that we do these because it does help you open up your mind and how to read these reports. Okay, so the first chart we have up here is Bitcoin. And as you can see here, this is the Bitcoin future. So the long term and the short term and the intermediate terms is what we're primarily focused with. But we're looking at weekly charts. We're not looking at daily charts. So on the weekly charts, we're just looking for what's happening right now. And as you can see here, the market ended the week on the upside. It closed near the highs of the week, and you got that upside continuation from the prior week. So right now, the market is locked and loaded, and we have a rally alert to start the week off here in Bitcoin. So we're anticipating another up week. All right. So as you know, the reports are updated every day. Weekly reports are updated once a week. They're updated every Friday. So when you close the week out, we'll see what the market does here. But this is what we're looking at to start the week out. We're looking for this type of a trade to manifest itself. So upside is what we're looking at. We got the upside momentum here. Your intermediate situation is a trend that is extending itself out, meaning that this bull market is still in a corrective space. And then you have a short-term low being posted with the market retracing some of those lows. You got this gap here that the market is attempting to rally and close. So we should be able to get closer to the 30,000 mark on the Bitcoin is possible if the upside trend is going to continue this week. So that's what we're looking for as we start things off. Next chart is the Nasdaq 100. This is the QQQ. And you can see here it ended the week also on a high note, closing out near the highs of the week. So we're extending these gains. We have a new weekly high posted. Bottom of the Kumo cloud is in play now. And that should take the market between $345 to $350 a share. So we still have a lot of upside room potential to move in the NASDAQ 100. Looking at silver by way of ticker SLV, also ending the week near the right at the highs of the week, posting a new weekly high in the process and giving us a primary rally alert to continue this week. So we're looking and anticipating for the market to rally quite to start the week off. And I think the retracement will put the market back between the $20 to $20.50 mark on the SLV. And if it can push past that part, then the next target, upside target, will be $22 a share on SLV. Next up is the S&P 500 by way of ticker SPY. The S&P 500 also ended the week on a high note, posting a new weekly high. The target for this one is the bottom of the Kumo cloud, around between 425 and 430. So still a lot of upside potential for the S&P 500 as well. Hey, what's up, Loco and the land down under? What up, peoples? All right, yeah, I got your back, man. I can put that up there for you real quick, being that your Monday is already technically starting. All right, so MXC, is that pharmaceutical thing? Yep, MGC Pharmaceuticals. See, I do remember. All right, let's take a look and see what your MGC did. All right, so MGC ended the week in negative territory, thus giving us a primary crash alert to start the week off in the MGC Pharmaceuticals. So it's looking like a lot of selling pressure ended the week here, giving us this alert on the weekly chart. You did have, and that's coming off of the momentum, and we were looking for some carryover, but we didn't get that. So right now it's looking like the market wants to pull back, and this little rally may have topped out. So we'll have to see. This one has been under the gun for quite some time. The bears have just been decimating this one. So we'll have to see if their selling is looks like it's going to at least start the week off with some selling. All right, let's see. Now you want to see S32. All right, give me a second. South 32. All right, South 32. All right, so South 32 ended the week on a high note, posting a new weekly high and thus giving us a primary rally alert. The initial target for this one should be around the 420 to 430. All right, that's the initial target zone for this particular security. So between 420 and 430 is the target high for this rally. So you still got some ways to go here before that one gets to the first hurdle. The second hurdle is to clear the gap that was made here. So the week ending June the 10th created this gap. So when the market reopened, the week ending June the 17th is where you created that down gap. So I think the rally's first target will try to get somewhere between 420 and 430. If it can overcome this, then the next upside target will be to close this gap before the market runs into its next hurdle of selling resistance. Okay. Okay. So Loco says crazy things happening in the property market over in the land down under. The interest rates causing some havoc. Yeah, I know. I know. We're gonna look at the interest rates also. We're gonna look because we do have the bond market. We're gonna take a look at. Okay, on Tito, we just did SLV. I think you just missed it. I just talked about SLV. PSLV, that's the Sprout SLV, and then I can pull that one up for you real quick. It's been a long time since I looked at the Sprout stuff, so let's see. Okay, here we go. Here's your Sprout. I'm assuming it's going to be the same as the SLV, but not necessarily. It's been my experience that Sprout doesn't always keep pace with the futures. Sometimes it does, but not necessarily all the time. All right, in this case, it did. All right, so your PSLV ended the week on a high note, posting a new weekly high, and that's giving us a rally alert to start the week off for Monday's trading. The initial upside target is around the $7.50 handle, and if the market can overcome that hurdle, then the next upside target will be between $8 and $8.50, which will put you right here at the bottom of the Kumo cloud resistance. All right, and the next one we have here is bonds. We're just talking about bonds. Okay, let's take a look at bonds by way of ticker TLT. Okay, so as you can see here, the bonds posted a new low, and it's a spike low. This is a bearish pointer the week ending June the 17th. And then from there, you started to rally. The market has posted several weeks rallying. It's been rallying for a month now, okay? Upside target is the bottom of the Kumo cloud at $140 a share. So you still have $20+ of upside potential in the TLT. All right, so this is going to be an interesting one to see just how bullish this one can get. And if that is the case, ladies and gentlemen, then you can expect for the interest rates to calm down. They have no place to go but down. All right, so that's something to think about as we get moving here. And keep in mind here on this weekly chart, the long-term trend is a bullish one. The intermediate trend is a bearish one. And the short-term trend is a bullish one. So what that means is you're in a long-term bull market that has been in retracement, and this retracement appears to have temporarily bottomed out. That's what that means. Okay. All right. Next up, we got let's do nat gas. Nat gas has been an interesting one. So long-term trend on nat gas is a bullish one. Bearish one, and then the intermediate trend is also bearish. All right, but the short-term trend has been a bullish one. All right, so as you can see here, you've been getting a lot of upside production for a month now, and then we had a spike rally on Friday. And the long-term trend is still bearish, and the intermediate is still bearish, even with all this rallying. It has not done anything to change the overall perspective of the market. Very interesting how this is shaping up on the algo charts. I know it wouldn't make sense on, on your standard charting packages. It'll be showing you something else. But on the algo charts, we look at the algo charts. Algo charts are a king, tells us everything we need to know in a given market. And in this case, this is what you got. So I'm anticipating that this will be taken out. Even if the market were to take a breather for a week or two, I think that this bullish pointer will be taken out. So to start the week, we're expecting more upside potential as you've been hitting new weekly highs for the last month or so. And that's what we got here. Taking a look at the US dollar by way of ticker UUP. So the long-term trend is still bullish. Intermediate trend is bullish. And the short-term trend has switched from bullish to bearish. You could make an argument that perhaps the market is just filling these gaps that the market made on the way up, and that's why you're seeing this this potential here. But it is what it is. Okay. On the week we just had here, how the market finished on a low note. That was coming off the back of a primary crash alert. And then we got that downside follow through, got that downside production. So I'm anticipating that the downside is going to continue. The market is going to be tested as far as support around the $27.50 handle, $27.50. If that support holds, then the market can put in a nice little pullback bottom and then continue to relock in the rally mode. However, if the 27.50 doesn't hold, then the top of the Kumo cloud is the next downside target, and that's between $26 and $25.50. So that's quite a ways down at this point. All right, so I got a few questions here. It's in the trading room's asking a question, and so is the chat. Okay, so what is your definition of short-term, intermediate term, and long-term trend? E.g., what is the length of short-term, 3 months, 4 weeks? Thanks. Okay, to be quite honest with you, I know this is going to sound like a cop-out, and it's going to make some people mad, but here we go. All that's proprietary. That's all algo stuff. So even if I try to explain it to you, it wouldn't make no sense. It would be like I'm making something up, but trust me, I'm not. Everything I use is all proprietary stuff. It's not based on, I don't use technical indicators like other people use, the standard package stuff. I just don't. All the indicators that I use, I make them myself. So you won't be able to find any of this stuff on any standard package. It's just different. And then how I plot them on the charts that I use for the videos, this is separate from the actual system that I use for my subscribers at PulseWaveTrading.com. What I do here in the videos is just art so that you can understand and see and follow along as I'm explaining what the markets have done and what the markets are currently doing. But the reports that we put out is totally different. It takes all of this information and condenses it down to, just the facts, ma'am, just the facts. But it's complicated. That's all I can say. Wall Street uses a whole bunch of different tools that they package to the public. And that's why the majority of the public are frustrated with their investing, because you're getting your stuff from the very people that are trying to milk you. So, because they're using algorithms, they're not using moving average crossover systems and all that stuff. They're not doing that, but they tell you, well, hedge funds use the golden cross, and well, and the 50 crosses the 200 and the 100 crosses. No, that's nonsense. Absolute nonsense. You cannot make money with that. Well, this stochastic oscillator, this momentum indicator, this RSI, whatever. If that stuff worked, they would never divulge it to the public, because they wouldn't want you to have it, because they'd be using it to take the opposite side of your trades. So always remember that. Always be leery of Wall Street. All right. They're not in the business of putting money in people's pockets. They're in the business of taking money out of people's pockets. And here at PulseWave Trading, my job is to put that money back in your pocket where it belongs, so you take some of their money. That's what we attempt to do here at PulseWave Trading. We're picking their pockets, not the other way around. So everything I do and use, all the tools are proprietary. The stuff I put on these charts is so you can see what I'm talking about. But the actual methodology, the actual things, the report that we put out on the dashboard, is totally different. This is complex, but it's art, and it's a great visual, so you can understand and see as I'm explaining stuff to you. But there's no way you could use this alone here and try to make a methodology out of it. It wouldn't make any sense. It would never work. This is just art for your consumption, so you can follow along with what I'm saying. The reports that we put out is where the meat and potatoes is, and they're very condensed. They're very easy. Buy here, sell there. This is what this market's doing. This is what's happening in the market. Boom. You can take the average report, 5-10 minutes tops, and you're already off and on your way to making money. But these videos is just so I can kind of explain to you what's going on in your particular market. But it is complicated. I'm not even going to lie to you. Everything I do is proprietary. We're talking about almost 30 years worth of market research and hundreds, if not thousands, of lines of code and algorithms and formulae, all that stuff. It's just a lot. Trust me, it's a lot. All of my experience coded and programmed, and then we add other layers on top of that. It's a lot. I think the only person that could probably truly understand and appreciate what I'm saying will be Cliff High. I think our methodologies have some similarities, as far as our approach to taking human behavior and putting a number assigned to it, put it that way. So that's basically what I'm doing. I'm taking human thought, emotion, and I'm quantifying it mathematically. And that's how I get what I get. It's simple at the end of the day, but what goes into making the simple is extremely complex, convoluted, and would confuse most people. And most people would say, dude, you're insane. I can't believe you put that in a methodology. That doesn't make any sense. Why does it matter, what time the trash pickup is per neighborhood, per day of the week? What does that have to do with anything? Well, that's just it. It's not for you to understand. It's for me to understand. So, yeah. I mean, look, I'm not going to lie and say that there's only one methodology that works in the financial markets, and that's my methodology. That's not true. I've met a handful of guys throughout the years who had equally complex methodologies, and we would, laugh and talk shop and have fun. But can other people repeat? No, absolutely not. Like, I know you guys have heard me say it before. There was a guy, I had a client when I first started doing the Wall Street thing. I had a client. He had a system, and he showed me his printout one day, his chart like this. His chart was infinitely more complex than mine, had way more colors and lines and dots and all types of crazy stuff. And he used I want to say divination. You know, he used astrology, astronomy, Zoroastrianism. He used some other world religions. I mean, he used it was crazy. And there were times where we were both coming up with the same information. Like we would write down our, like, let's say what our analysis is on the S&P for the next day, right? And they would say, okay, all right, I got mine. Are you ready? You got your, okay, let's go. All right, what you got? And then we would show each other, and it'd be like the identical. We both arrived at the same thing. In a few occasions, we even arrived at the same price, and we were both sitting back laughing. And you know, his explanation of how he arrived to his stuff was crazy. And then, you know, when I explained mine, we both would just laugh. He was the only guy I met like that who used some type of financial divination to come up with what he was doing, and it was hilarious. I've seen other people. Their methodology is so simple. If I told you what they revealed to me, what their methodology was, you wouldn't believe me. You'd be like, "That's impossible." But no, a dear friend, he created a methodology for day trading the S&P 500 futures, and I have to tell you, it had like a 70% effective rate back in the day, and it worked. It worked for him, but it was so simple. It was almost too simple. Then I had, and I remember another guy. I could not pinpoint what he was doing, but he was all over the place with his stuff. So I've only known a handful of people that I can pretty much count on one hand that really had a real robust methodology. And so I know of a few ways, or I can say I've known a few guys. We all use different things, but yeah, there's more than one way to do something, but it's not easy. It's extremely complicated. I've tested and tried just about every methodology and trading system that you can think about. I've read just about every book, every magazine article, you name it. Futures magazine, stocks and commodities magazines, trader magazine, the Economist, you name it. Interactive brokers, you name it. Investors Business Daily, man, Ken Roberts, Larry Williams, you name it. I have studied big time. I even read George Soros' Alchemy of Finance, one of the most Einstein-y, brainiac things I've ever read in my life. Very heavy read, very difficult for the average layperson to understand, but very, very decent book. Like I said, it's not a big room. It's a very small room with people that do what I do and do it to a high degree of success. And it's not easy. It takes a lot of time. That's one thing about trading. You know, there are many people that set out to create the golden calf. You know, the holy grail. And that's one thing with trading. There is no guarantee of success, no matter how hard you work or how good your research is. There's still no guarantee of success. And even those men of the past who have achieved some certain level of success, they'll be the first to tell you the reason why they're not successful today is because their systems broke down. Their systems were based on a flaw, and most systems are based on some type of anomaly that occurs in markets. And the government has a way of coming and changing laws, rules, and regulations that close those anomalies. And so when those anomalies are taken away, their systems break down and no longer work. And that's why you don't create a methodology based on trying to, take advantage of an exploit. Exploits don't last forever, and when they go away, so does your methodology. So the methodology should be based on sound principles. And like I said, there's for those that are within that vein, I would highly recommend Market Wizards. There was a series of books written back in the day. The original Market Wizards book, he was interviewing commodity traders. very big time famous trader dudes. And then he did one for stocks, the Market Wizards for stocks. Some of the characters in those books were absolutely hilarious. Some of them are still around today, as a matter of fact. You probably know some of those people, like Richard Dennis and his Turtles, who went on to achieve some of the greatest success in history. What's that guy's name? Paul Tudor Jones, is probably one of the most famous turtles of all time. And then you have Linda Ratsky. She's still around. She's still, I think, on YouTube and stuff like that. She's been around. She's a triple OG from back in the day. There's been a lot. I mean, it's quite a few people, but overall, when you look at 7 billion people on the planet and how many people do what we do, it's a very, very small percent. It's not as many as you would think. A lot of the old school people, again, theirs were based on principles that don't exist today. That's why a lot of them, they closed their funds. I think more funds closed in 2008, 2009 than at any time in history. And then we had some more that happened around 2012, that 2010, 2011, 2012. A lot of funds was closing up shop because they were like, I can't make money in the market anymore. And it gets to a point too where, like I say, laws, rules, regulations change, and they can't use their exploits anymore. They can't cheat anymore. So anyway, I'm off of that. Let's move on. All right, so the next chart is ADA Cardano. ADA Cardano, as you can see here, has been in a downtrend channel, and it looked like we may have bottomed out. But every time it looks that way, the market always uses whatever short-term weekly rally to bring the market even lower, and that's what's been happening here. So this one here, we have now 2 weeks, but the market isn't really giving that upside production. It's trying, but it hasn't. So this one, it's a tough one. Back here, you had upside production from the rally alert, which was great. This one, we got no upside production from the rally alert. The market just used it to sell. So it's been searching for a bottom for some time now. And right now, you're in the consolidation zone, which is this bar here from the week ending May the 13th. And price has been just staying within this range. So until it breaks out of this trading range, I don't really see too much happening here. But right now, the bulls seem to have the advantage. All right, let's see here. Litecoin. All right, so Litecoin is trying to get off the ground as well, doing a little bit better than ADA Cardano. Upside target for this one is going to put it around $180. So this one has a very large upside potential behind it on Litecoin. So Litecoin is looking all right now, definitely. All right, next up we got Ethereum. This is the Ethereum futures. And as you can see here, nice upside production from the rally alerts. I would say I put it, let's say 2,200. I think upside resistance for this target will be around the 2,200 mark, anywhere from 22 to 2,500. So you got a nice upside potential here as well. A lot of ground to make up for. So far, you have closed the gap that you made the week ending on June 17th. So technically speaking, the market could come right back down now, but I think he wants to try to push forward a little bit more. All right, here's your theta. Got to switch this one to the daily because the chart won't pull up otherwise. Theta has just been flat, folks. You got a double extended trading range between these two bars right here. All right, so top side is $1.85. Bottom side is 99 cents. So that's quite a whopper of a trading range, and price action has been maintained within this range and has not broken out. Last couple of weeks though has been incrementally moving higher. Upside target will be the top of the Kumo cloud around the $2.20 handle. So we'll see if Theta can break out of that mold or not. XRP Ripple. All right, same thing here. We got the rally alert, couple of weeks of upside production, but just tiny bits, just slithers. Upside potential is going to be between 60 and 70 cents if the market can get that, and you do have a wide open run here if it can get the momentum behind it. So this is going to be interesting as well. All right, let's take a look at the gold miners, GDXJ. All right, so coming off of the rally alert, this one gave you nice upside production from the week prior. I think the target here is going to be around $38 plus. That'll be the initial target, that $38 range, and then we'll see where it can go from there. Bottom of the Kumo cloud will be next around the $43 handle. All right, next we got GLD. All right, looking at gold. All right, so gold, the initial target, excuse me, is $170 a share. From here, nice upside production from the rally alert the week prior. New weekly high being posted. This is the third. Actually, this is the first real weekly high that we've had. So this one has some good potential behind it as well. Looking at the Russell, my hustle, IWM is the ticker. This one was consolidated for about a month and then finally broke out topside, giving that upside production. It just took a while. You had to hang in there with it for a little bit, but it finally broke. Bottom of the Kumo cloud around the $210 mark is the target for the Russell. All right, looking at the last one, which is crude oil, ticker OIH. We'll end it here. We had that rally alert coming off the week prior. We got this whopper of upside production. I think the resistance or initial target will be between the 270 and 280 range on this one. So you have a potential of a $30 to $40 run on this one. But just keep in mind what you're doing. You're counter trend trading. You're taking the rally off of the support lows. And you're in a long-term bear market, intermediate-term bear market, and your short-term right now is that bullish momentum, that dead cat bounce out of an oversold condition. And with that being said, remember PulseWaveTrading.com. Take the 14-day challenge. I double dog dare you. That's right. There's a 14-day free trial right now that we have going on. You just go to PulseWaveTrading.com. Doesn't cost you a thing. Take the 14-day trial. And within that 14 days, see how much money that you can possibly put in your pocket. That's right. We are so pumped and excited for you. And we know that you're going to be able to build that income stream for yourself. That's why we're confident in giving a 14-day free trial, because we know that you are definitely going to fall in love with the reports. And that's PulseWaveTrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And smash that like button. I'm out. Peace.